Hey guys, Will here coming in with an update for March 2021. I'm going to try and keep this one between 5 and 10 minutes in this new format. I actually did a test run this morning and I think it went for about 20 to 30 minutes. So without further ado, we are going to zip through some stuff. So basic rundown, home loan news, property market update, and broader economy fast rundown. So with home loan news, first off, we've got some more fixed rate reductions. So this time around, Westpac have come in and now our 2 and 3 year rates are below 2%. They are 1.89 for, that is 2 years, and 3 years 1.98. So that's pretty big news in terms of, I think they're the second biggest bank in Australia. So you can bet your bottom dollar that everyone else is going to follow, and this trend of reducing interest rates is going to keep happening, especially with the Federal Reserve pinning interest rates down till I think they mentioned 2028. So that's a long time with super low rates, which is going to tell you, gives you some idea what's going to happen to house prices. Next off the rank, major bank steps back on tough lending policy. So this one is CBA, Commonwealth Bank, which is Australia's biggest lender. They've announced a few changes, but the major change is the reduction in statements from their credit assessment process. So one of the biggest pain points in the last 3 years is banks, when they assess your home loan, they want to look at your bank statements and figure out what your living expenses are. Now, they can vary a lot from month to month, and banks peel over every transaction, and that's just been made a nightmare. So this, I think, is the start of a major peelback with the whole industry. And to support my opinion there, we've got responsible lending laws 1 back, which is due to go through Parliament. I think it was March. It's probably been delayed by now, which is what generally happens. But as you can see here in this Sydney Morning Herald article, banks spruik responsible lending rollback as a win for customers. So this has all got to do with responsible lending laws, but they've kind of worked it all into lending around the pandemic, because that hasn't really worked very well. So as banks do, they're going to push for more lenient lending across the board, and I quietly think they'll get in, because my opinion is that banks and the governments, they're good mates, all of them. So that wraps up the home loan news, property market news. In terms of looking at the property market and seeing how it's behaving or it's performing, I look at a couple of things, and it's very basic. It's demand versus supply. So demand is quite high at the moment, obviously. If you paid any attention, properties are going, they're being listed for 1 day and getting sold. So demand is high. I don't expect the demand to be so high now. The demand's been really high because basically we were in lockdown and no one bought houses for 6 months. Having said that, I don't think the nightmare scenario is going to happen where the bottom end's going to fall out of the housing market. I've maintained that since the pandemic started, and I don't see that changing. On the flip side of that, you look at the supply, and there's no supply on the market. So the low supply is going to make the demand still look relatively high and continue to push prices higher. The only thing that would slow that down, I think, is a global markets crash, which is definitely something that could happen. But overall, I still think it's going to go up. Another interesting thing about the market is it's not just first homeowners. We see on the news first homeowners because there's 101 grants out these days, but in the Mornington Peninsula area and the Frankston area where I operate, there's quite a number of upgraders as well. So they're your first homeowners of 5 or 10 years ago, and they've got better jobs now, they've got better income, they've got some equity, and now they're going for that house, 5Ks away, just in a better suburb and a better surround. So it's actually affecting the $1 million plus part of the market as well. So those properties are flying off, and there's low supply of that. The third one is a little article here. It's a Herald Sun article from June, which is, funnily enough, just after the first lockdown, but just before the second lockdown, and it's saying that property prices aren't dropping despite what a lot of the alarmist news says. And surprise, surprise, it's got Mornington Peninsula is one of those areas to watch out for. So, and I think coming off the back of COVID, the same thing's going to happen with people that live in the inner city. They don't want to live in the city anymore, and the peninsula is a great place to sell their place, which might be worth a fair bit now, and go and buy in the peninsula. That's it for the property wrap up. Broader economy news is same as what it's been for a while, actually. It's weak. There's been no wage increases for probably 7 or 8 years now, no real wage increases, and obviously COVID's having its effects. So I just wanted to show you this article, which basically tells you what I've mentioned before with the Royal Bank of Australia pinning down interest rates. So basically what they're saying is they're not going to increase interest rates until they see wage rises, which we haven't seen. So I would make a fair assumption that that's not coming anytime soon, and that will tell me that interest rates are going to remain low, and that would tell me property markets are going to continue to rise. Next is money printer go BRRRR, and that is basically coming off that article which you've just seen. So central banks, not just in Australia, across the world, are going to continue to print money, and that printed money is going to push up asset prices. So property, which most of my clients will want to hear about, property is just going to continue to go up for now because they're just going to keep printing money. So off the back of that, I just wanted to show you this article which I found from 2015, and the headline says it all. Money printing has caused inflation, just not where we expected. What that means is the money printing was meant to cause wage inflation, but what happened was asset inflation has taken place, and now we're in a position where we've got record property prices, record stocks prices, record bonds prices, record gold prices, even record crypto prices, which wasn't even a thing until recently. So this has just been, the reason why I outline this has just been the way it has been for the last 5 years. Nothing's going to change. Things are going to continue to go up. Of course, none of my stuff is financial advice, but this is all my opinion, and that opinion has been in place for a while, and it's continued to prove itself over time. That's it, guys. Hope you enjoyed it. Hope it wasn't too long if you got to the end, and I'll see you next time.